And yeah, today I'm going to talk about three proven ways to make more money in the market. And a lot of these techniques may be a little eye-opening for some traders. A lot of traders out there feel that technical analysis is the only way to make money in the short term. And I'm going to try to put holes in that theory and make you think about that more and show you a methodology that combines both the technical analysis and the fundamental analysis techniques that are used by many of the top traders out there. So I just want to point out before I get going here that I'm also founder of InvestToBeFree.com. That's the icon that's down below there. I founded Trade-A-thon back in 2004 and InvestToBeFree back in 2012. These three proven methods are dealing with stocks with rapidly improving fundamentals, and TradingPub.com is dedicated to traders who want to trade these stocks, these top stocks in the market to trade that have the proven fundamentals to make a move higher purely based on the fundamentals in the short term. And InvestToBeFree.com is more for those folks who don't want to use technical analysis, and also for those who want to buy and hold the best stocks in the market. I'm going to show you how you can do that as well. So I just want to point out, too, that the icon in the upper right-hand corner there, that's a Better Business Bureau logo, and I've been a member of that since 2006, and we have the highest rating with the Bureau, an A+ rating, and you can check us out for more information about our company at the Better Business Bureau online. So, okay, so without further ado, I'm going to start with the first slide here, which is concerning TradingPub.com and about trading in general, and what traders normally use in trading, and a better way of finding stocks to trade if you do want to go the trading route. Okay, and traditionally most traders have primarily used technical analysis, as I was saying before. They might play gaps, you might buy breakouts, candlestick patterns, ABC patterns, etc. And you're playing these overbought and oversold conditions, oftentimes within a trend or a trend itself. And meanwhile, investors look primarily at fundamental analysis. Okay, if you look at a guy like Warren Buffett, for instance, he'll find a company that he can understand, and he'll buy that company at a very reasonable price compared to the value of the company he expects it will achieve within a few years. And he's not so concerned about technical analysis. So most investors look primarily at fundamentals, and most traders look primarily at technical analysis. And actually, the top traders out there use a combination of both. If you look at the all-time record holder for trading, top fund managers, people win trading contests, etc., they use a combination of both. It might be moving averages. It might be the long-term trend they're looking at. They might be looking for more volatility. But they're even the top traders that claim that they use just fundamental analysis. They also use at least some form of technical analysis in most all cases. But the top traders that are very top experts in technical analysis, they also use fundamental analysis as well with that technical analysis. And why wouldn't you? You have many advantages of using both. Why would you buy a breakout out of a flag pattern on a stock that didn't have the fundamentals to support the next leg higher in the stock? For instance, why would you buy a double bottom breakout on a stock that didn't have the growth to support a big move in the future? Okay, so when we talk about fundamentals, we want to narrow that down and figure out which fundamentals matter to us as traders. And most trades that we do are swing trades. Some are momentum trades. They generally run for anywhere from a few days to a few weeks, which is pretty typical for swing trading and momentum breakouts. A few weeks to a few months. And over that time horizon, over that time frame, which fundamentals matter the most? In other words, are there any fundamental characteristics of stocks that will help carry the the stock further than the average stock in the market. And there's actually two characteristics of stocks that have been proven to beat the market in the short run over that time frame that we're in the trade. Okay, and those two characteristics are earnings and sales growth, the magnitude and consistency of that growth. We're not talking about stocks that have really high sales growth or really high earnings growth for 3 months or 6 months, pulling off 1 or 2 good quarters. We're talking about companies that have grown their earnings and sales more than 20% per year for a few years in general. You know, those are the kind of stocks, as long as they have other key fundamental characteristics that I'll go into a little bit here. As long as they have those other characteristics, they tend to beat the market over that time frame that we're in the trade, purely based on those fundamental characteristics. Now, the other type of stock that we look for, the other key characteristics we look for from a fundamental perspective is earnings estimate revisions. Now, an estimate revision, what that is the change in the future estimates made by analysts and the company itself. So at any given time, each company will have an estimate for what they'll earn the next quarter, the next year. Oftentimes, you know, over the next 5 years, what that earnings growth should be, you know, from their vantage point. And those estimates change over time, okay? Those companies where the estimate revisions are moving higher, okay, and if they're beating those estimates, those companies tend to beat the market by a wide margin in the short term. And that's a key thing to understand. Whether you're an investor or a trader, you should understand that. And you know, if you want proof of that, one thing you can look at is the Zacks ranking model. Zacks.com and Zacks Investment Research has been around for, you know, I think 30, 40 years now, and they have come up with a ranking system. They came up with it back in 1987, I think it was. And they rank stocks based on the company's ability to beat estimates and whether those estimates are trending higher or not. And so those top-ranked stocks they have in the ranking system have a tendency to beat those estimates and have rising future expectations. And those top stocks in the ranking system have I think, averaged somewhere between 25 and 27% per year on average over the past, I think it's been, you know, almost 30 years now, at least 25 years. So that's some proof right there that, you know, at least in the short term, these stocks tend to beat the market. That ranking system that they have, it assumes that they rebalance their portfolio every, I think, month or a few weeks. And what that means is that, you know, as companies, as new earnings reports come out and as estimates change, the ranking, you know, which stocks are ranked number one changes over time. So you would change the lists of the top stocks, you know, every few weeks. And, you know, if you just hold those top stocks for a few weeks, and then when, you know, certain companies are actually beat the companies that are beating the companies that are already on the list in terms of those estimate revisions, in terms of beating estimates, then those new stocks will go on the list in favor of those other stocks that are coming off the list. So, you know, if you have to do some trading every month, taking some stocks out and putting some stocks in. But my point is that those companies that are beating estimates with the rising future expectations, more so than the rest of the market, are the ones that tend to beat the market in the short term. Okay, after those estimates are revised upward, and after they beat those earnings expectations. Okay, so that's a very, very important point to understand as a trader or investor in stocks, and one thing you should carry away from this presentation and utilize in your future investment and trading endeavors. So, okay, so those are the two types of stocks that we look for, you know, with the right characteristics, right fundamental characteristics, okay? And you'll notice that these characteristics are very rarely found in penny stocks and lower quality stocks. So what you're left with are companies that are pretty high quality. Companies that have been growing very quickly for a long period of time. We're talking about the Apples of the world, the Pricelines of the world, the Celgenes of the world, really top high quality growth stocks, and also companies that aren't necessarily growth stocks, but they do beat their estimates and they do have rising future expectations. So this keeps you away from those penny stocks and lower quality stocks that tend to crash and burn after a breakout rather than make that next big move higher. Okay, so that's where we start. We start by finding the stocks that have these two qualities. Okay, so now once we find these stocks, what we do is on Trade-A-thon, what we do is we apply the right technical analysis to find the right entry point and the exit points and stop loss points on these stocks to trade more effectively and with a higher degree of success. Okay, and what we basically do is we find these explosive chart patterns on elite growth stocks and these UPOD BT stocks. UPOD stands for under promise, over deliver, and BT means better than expected. So what those two terms mean basically is that the company is beating expectations that the street has on them. Okay, and we also carefully screen for other important quantitative criteria, and then we go look at each stock individually, their charts, and we look at the financials as well and to identify any red flags. Okay, and again, what we're doing on TradingPub is we're looking at these stocks, these companies that are beating expectations with rising future estimates, and the elite growth stocks out there, and we're finding the chart patterns, the trends, using technical analysis to find the great entry point, the target sell price, and the stop loss point. Okay, so that's TradingPub. Okay, and the second method that we use is less time consuming and requires less technical analysis, and it's taught on InvestBeFree.com. All right, but I'm going to first talk about TradingPub.com. I'm going to show you a couple of great examples of the type of stocks we look for and the type of charts that we look for to be a more effective trader. Okay, again, we're looking for just the best technical entry points and stocks with the aforementioned fundamental characteristics. And in each market, in any given market, there's only a couple hundred or so that meet the strict requirements that we have for the stocks that we trade. And then once we find these stocks, again, we find the swing trading and channeling stock patterns on these stocks. And normally these stocks are in a long-term uptrend. Okay, and not only do we have swing trading setups, but we also have momentum trading setups on the site in our own trading on top growth stocks. And again, stocks with that great long-term track record of strong sales growth and earnings growth. And I want to mention that we don't have any dogs on our site. We don't have too many penny stocks. The penny stocks that we do have on our site are the ones that are beating estimates with the rising future expectations. In general, those are the penny stocks that do well, and 99% of them don't. So you want to focus on just the best, especially when you look at the smaller companies that have been around as long, that have the smaller market cap and smaller sales. So on our site, we don't have any dogs. Okay, now I'm going to show you a typical swing trading setup that we look for on our site and also in our own trading. So we use these same three techniques I'm talking about today in our own trading to make money. Okay, so this is the first setup. I'm going to show you a swing trading setup that we feature on TradingPub.com. And it's an example from our recent Daily Alert newsletter. Okay, and that's our premium newsletter that we sell on the site. Okay, and this stock maybe is one you've heard of. It's made the news this year. It's made a great move. It's a Chinese stock, Bit Auto Holdings. And as we can see on this chart, it has a very long-term uptrend. This trend, which is identified by drawing a line connecting the lows in the trend. And if you're not familiar with trend analysis, on a stock chart, what you basically do is you draw a line, a straight line, connecting the lows, excuse me, connecting the lows in the trend from the start of the trend to the current time. Okay, and that's what we've done here. If you go back further, back to prior to August of 2013 on this chart, you'll go back another year or so and see this trend has lasted for 2 years, around 2 years. Okay, and we can see that we have a very well-defined trend. Now, to really be a confirmed trend or uptrend, you have to have the line connecting at least 3 lows in the trend. Okay, in this case, it's more than that, and that's a good sign. So you want to see a long-term uptrend. The longer the uptrend, the better. Again, in this case, it was a couple years. Now, within the trend, you'll see a lot of, and I'm going to start using my drawing tool here so I can point this stuff out for you guys. But during this long-term uptrend, you can see that there's these pullbacks back to the uptrend support. So you can see in the beginning of the chart here to the left in August up to early September, you can see there's a downtrend that occurred in August here back towards the uptrend support. Okay, and you can actually define that trend by drawing a line. It's not a very straight line, and I don't think there's a way of drawing a straight line on here. I don't see it with this software, which I'm kind of new to, but you can see if I do it carefully, this trend line here. On most charting packages, you can choose an option to draw a straight line, so you just want to do that, and you can draw that line connecting the highs within the short-term downtrend back to the uptrend, the long-term uptrend support. Okay, so in this area here, after it's breaking this, this downtrend again, not familiar with this drawing package, so it's a little sloppy this, so I apologize, but the idea is to buy the stock as it's pulling back to the uptrend support and after it's broken that short-term downtrend. And that's what we look for. That's when we enter the stock, when it's broken that short-term downtrend and it's beginning that next phase higher in the overall uptrend. Okay. Now, sometimes what you'll see within these long-term uptrends and these consolidations back to the uptrend support, what you'll see are these bullish chart patterns, these classic bullish chart patterns. Okay. Now, we can see here back in, started in early March and went through most of June. What we have here is a bullish cup with handle pattern. Now, many of you are probably familiar with this pattern. Some of you aren't. But what it is, it's basically a rounding sort of bottom pattern. You can see it much better on a weekly chart. There's a lot of volatility in this one, so you can't see it so much on the daily chart. But if you switch to a weekly, you can see that rounding shape to the consolidation. And then off to the right, you'll see oftentimes we'll see a horizontal consolidation or sideways movement in the stock. And here again, it's a little volatile, but you can define a resistance in the handle off to the right here. But you can see that line I've drawn here, it's already there, that straight line. And the target entry out of this pattern is a close above that resistance in the handle area. Okay, so that's the target entry point. And this is explained more on our blog, in our newsletter. And we can answer questions by email too if you have more questions about these patterns. I'm going to answer the questions that you guys have today in about half an hour or so. So as you have questions, just write them down or type them in, and then I'll go ahead and answer those questions after the show is over, so to speak. So, but I just want to point out that in these long-term uptrends on these stocks, with these rapidly improving fundamentals, you'll have these type of consolidations. Okay, and if you see them, if you see a double bottom pattern, if you see a couple of handle pattern, if you see a flat base pattern, these bullish price patterns, you wait until the stock breaks out of that pattern. Okay, otherwise, just wait until a downtrend resistance has been broken as the price is coming down to the uptrend support. So if we look at, say, early April here, we can see that the stock is coming back to its, again, I apologize for not being able to draw straight lines with the software, but you have to be a little careful. You can like draw a line that touches the tops, the highs within the downtrend, the short-term downtrend, coming back to the long-term uptrend support level. Okay, so now you could have just bought as the price is piercing that line, that short-term downtrend resistance line, and entered there. And then, in this case, you would have waited a little longer to see that big move higher, which I'm going to show you in a second here. But in many cases, that's what you'll end up doing, is buying as that short-term downtrend is broken. Okay, so but in this case, we found the stock as it was forming that cup handle pattern on a weekly chart. We waited until the proper entry point on that type of pattern, and if we look at the next slide here, we can see that again that entry point was here in mid-June. I'll use my pencil again so you can be sure to see it, but I'm going to try to draw a circle around it if I can. And that area where it's breaking above that resistance in the handle of the pattern is the entry point, and you can see soon after the stock more than doubled in price. And you'll see a lot of these coupled handle patterns. You'll see a lot of rounding bottom patterns in the market, which is great. But if you don't have the fundamentals that are improving quickly, if you don't have a top growth stock in your hands, the stock is very unlikely to make this kind of move. However, in this case, the stock was growing earnings very quickly for a number of years. Sales were growing quickly, and this stock had a fundamental momentum to support that kind of move out of that pattern. Okay, and it, like I said, it doubled in price, more than doubled in price within 2 months. Okay, so we have a lot of these setups featured in our newsletter throughout the year with these kind of patterns, with these kind of fundamentals that can support the big move, without the dogs that tend to turn over on you when you least expect it. Okay, so that's a great example of the kind of swing trading setup that we look for. The ideal situation, again, where you've got both strong earnings growth and sales growth, and you've got the rising estimates with a company that tends to beat estimates. Now, a lot of these setups that we find have either or. So either they're a top growth stock or they're beating their estimates with rising future expectations. And those are good setups as well that we feature. If you have one that has both, they're top growth stock and they have the rising estimates and tend to beat those estimates, that's ideal. And we find the great technical setups with those stocks. And then we alert you once they are near that entry point, that ideal entry point. We'll let you know, and they often take off soon after. So, okay, I'm just going to cover the characteristics of this near perfect setup. I want to share this with you, and so you can find it in your own trading if you want to grow it alone. Again, the stock had very strong, consistent long-term, consistent long-term uptrend, stretching back for years in this case, but you want to see a year or more, ideally. It's consistently beating its earnings expectations by a wide margin, not by a penny, not by 2 pennies on average, but by 10 cents per share, 5 cents per share, 15 cents per share, and more. Okay, those are the kind of earnings beats you want to look for, not the 1 penny beats. Okay, it had the rising estimates. You want to find stocks with strong earnings quality. Other key fundamental characteristics are present, such as high insider ownership. If the managers within the company, if they hold a large percentage of shares, that's a good sign, bullish sign. If they pay a high dividend, that can be a good sign. If they have a high return on equity, another good sign. The peg ratio, you can check that out. Make sure the peg ratio is not too out of whack. Although the top growth stocks, if it is a top growth stock, a lot of these elite growth stocks will have a high peg ratio, and if they still have a very strong fundamental and technical momentum without too much volatility in the price, then it's still a very good setup. Okay, ideally you want to find a bullish chart pattern such as a flat base, couple handle, rounding bottom um, uh, on elite growth stocks, but that's not required for swing trading setups on the companies with rising estimates that are beating those estimates, or even on elite growth stocks. Okay, but you don't want to necessarily find the flat base and the couple handle and rounding bottom patterns on companies that just are beating estimates or just are just with the rising future estimates. If you're gonna trade if you're gonna do a momentum trade, if you're gonna play a flag breakout, a flat base breakout, a rounding bottom breakout, you want to find those chart patterns on the top growth stocks, not on the companies that are just beating their estimates with rising future expectations. They just don't generally have the enough momentum to carry the stock a lot higher to justify the risk, the downside risk. And every trade has a downside risk. So you want to know what that risk reward ratio is ahead of the trade. Those momentum breakouts generally need to have a high upside potential to justify the risk. Okay, so for those companies that are beating estimates and with the rising future expectations, you're going to find just a very good swing trading setup where you're playing either a wide channel, a wide horizontal channel, or you're playing a long-term uptrend where you're seeing a very confirmed strong uptrend, not too much volatility in the stock again, and an uptrend that can be sustained for the earnings growth that stock typically achieves. Okay, you don't want to have too steep of an uptrend for a company that just can't sustain that kind of move higher for very long. Okay, so again, in general, the entry point is once the price closes above a downtrend resistance, or when it's breaking out of one of those bullish chart patterns that I talked about. And this is explained more in our book, in our blog, in our newsletter, on our site on TradingPub. And again, this was a great swing trading setup. It had all the fundamental characteristics you could ask for, and it had that great long-term uptrend and a bullish chart pattern as well. And we feature a lot of these throughout the year in our newsletter. And we look for these also in our own trading, along with the swing trading setups. And that's one thing I wanted to mention to you and point out is that these techniques that I'm showing you today are ones that we use and have confidence in our own trading. We don't just deliver them to you in our newsletter. We also trade these same stocks and these same type of patterns and breakouts. And like I said, we have a lot of these great setups throughout the year. Okay. Now, so that's one type that we have on TradingPub.com. Now, the other type of technical setup that we look for on TradingPub.com is a momentum trading setup. And again, I'm going to show you an example of this instead of trying to explain it to you. Before that, I'm just going to show you a great example, okay? And this is the first trading setup that we got really excited about in 2014. It was VIPS. In fact, it was the very first trading setup that we featured on our site in 2014, this year, okay? The stock had triple-digit earnings and sales growth rates when we found it. It also had very strong fundamental metrics besides that. Now, one thing you want to look for with these type of momentum trades is other stocks in the same industry doing very well at the same time. Okay, and Kihu is an example of another stock in the same Chinese internet space that was doing very well at the time. Okay, and VIPS, this setup is an example of a chart pattern that's normally more bullish on a weekly chart but the fast movement of the stock in the industry made the pattern on a daily chart more attractive to us and caused us to want to feature it to our subscribers. Okay. Now this pattern is a double bottom pattern. It's considered very bullish by most technicians, and nearly all top growth stocks have broken out of this pattern, or cup with handle pattern, or flag pattern early in their epic move. If you look back at Apple, if you look back at Priceline, if you look back at Celgene, if you look back at virtually any top growth stock, you'll see that these stocks almost always break out one of these patterns early in their epic move. Okay, but the double bottom pattern is one of these. It's fairly easy to spot. It looks like a W on a chart. Usually you want to see it on a weekly chart, but again, this stock was moving so quickly that it showed up on a daily chart, and it was so well formed that we got really excited about it, and we featured it in our newsletter as a first top trading setup this year. And here it is in the chart, and I apologize if it's not a little hard to read, but I'm going to use my pencil here to point out the pattern. You can see here that the pattern started in the middle part of November. There's one leg down here, followed by a rebound, and then another pullback, and then another rebound, oftentimes into a handle, which we can see this a horizontal consolidation that goes basically just horizontal left to right on the chart, ideally with a slight downsloping bias, which was the case here. But again, it forms that W on the chart, okay? And that is the bullish double bottom pattern. And again, you want to see that within a strong uptrend. It's a consolidation within the uptrend, okay? And the breakout point on this pattern is once the price closes above the resistance in the handle. And I've drawn a line right there. You can see that at the very right portion of the chart. The resistance was just above 85, I believe, $85 a share. And you can see that price piercing above that line just as the new year started, okay? That's the breakout, and that's when we featured it, and basically you just jump in the next morning. And one thing I want to point out with our methodology, with all these techniques I'm sharing with you today, you can execute the methodology and make money without really watching the stock during the day. So in this case, the entry point is the following morning. So what you do is you put in a buy order in to buy the stock at the market price the next morning, okay? And you can do that anytime between 4:30 or 4 p.m. When the market closes or after market closes, anytime between 4 p.m. and 9:30 a.m. the next morning. So if you work during the day, or if you work second shift or third shift, you'll have an opportunity to put that order in sometime between 4 p.m. That day and 9:30 a.m. next morning, okay? So you don't have to watch your stock all day. You just put the buy order in to buy the stock at the market the next morning, and you don't have to watch the stock all day. You can just put that order in with your broker at 10 o'clock at night, okay? It executes automatically the next morning. You're off at work or traveling or whatever you want to do during the day, okay, while that order is executed. And with our methodology, you put that limit order in to sell at the target sell price the next day or the following evening, whenever it's most convenient for you, and then you just check the stock each day for any sell signals, and if there are, you just put an order to sell at the market price the next morning. Now, we have the confidence to do that because these stocks have the fundamentals that are rapidly improving. And we have found that if the estimates are rising and they tend to beat those estimates, there's less downside in the stock. So we're very comfortable using this methodology in that manner, and don't watch the stock during the day. And most analysts will tell you that rising estimates and a company that's beating estimates will put a floor underneath the stock. And it's kind of like a buoy. You know, it can be pulled down a little bit, but it'll tend to up. And that's what we have found over the past 10, 12 years of using this methodology. Now, during a market downtrend, or if a market is peaking, then you want to be more careful. And in our book, on our site, and our newsletter, we keep you alerted for these bearish market signals. So when it's more likely that the market's about to turn over, we let you know. And the signal that we use has been very reliable. There has been some false signals. So you know, you can get bearish signal, and the market only pulls back 1, 2, 3%. But in those cases, what you do is you wait till the market takes out the highs, the prior highs, and then you go back bullish again. Okay. But we tell you when to get cautious and when to be on the sidelines in cash, and also when to go short. If you want to go short, buy put options and trade that pullback in the overall market before the next uptrend begins, because there's always another uptrend. There has been for eons. So once the downtrend completes itself and you've got a bullish signal in the market, we alert you to that, and then you can start riding the market higher with these long trading setups like I'm showing you right now. Okay. So so getting back to this trade, this is a bullish double bottom pattern. You know, you buy it the next morning, you get your buy order in, and we can see here. Let me get my pencil out again. Let's not use yellow, let's use black. Okay, so again, here was the entry point. Okay, I'm like not sure why that's doing that, but anyway, I just highlighted in gray where the entry point was. It was beginning of 2014. Again, you can see that right here. This is the beginning of 2014 over here. Right here, this is the breakout point. I apologize, I'm not sure exactly how to use this pencil, how to change the mode back to what it was before, but you know, this is a breakout point that we highlighted to subscribers back at the beginning of 2014. Okay, and we can see out of that pattern, and because the company had those rapidly improving fundamentals, the very high sales growth, very high earnings growth, the company or the stock took off shortly after. And again, this is a case where the stock more than doubled within about 2 months after it reached our entry point out of that pattern within that longer term uptrend. Okay, so you know, again, you want to look for those patterns. Okay, and I'm just going to go over the guidelines for identifying these patterns so that you can find them in your own trading. The pattern generally takes at least 5 or 6 weeks to form. This bullish double bottom pattern, it's often 2 to 3 months, which corresponds to the time between earnings releases. The middle of the W needs to be lower than the left side and the right side of the W. If there's a handle, it generally starts above the center point of the handle, but it can be below the center point as well. The distance from top to bottom of the pattern should not be more than, say, 40% to 50% of the current market pullback. So generally these patterns develop during a market pullback, and the overall pullback in the stock that you're looking at should not exceed, that pullback should not exceed within the pattern, should not exceed the more than 40 to 50% of the overall price at the time, okay? And it should not be more than 2.5 times the pullback in the market averages. So I think I misspoke there. I meant to say 2.5 times the pullback in the overall market averages. So let's say the market pulls back 10%. You know, the stock shouldn't pull back more than 25% from top to bottom within the pattern. Okay. In this case, this was a Chinese internet stock, so we would look at the Shanghai index and make sure that the pullback in the stock didn't exceed more than 2.5 times they'll pull back in that major indice or around there. Okay. Now, the smaller the pattern, the better. A tight consolidation like this one, without too much volatility, is a strong bullish sign. Okay, you want to see these downtrends within the pattern. So go back here to the pattern, and you know you can see that this downtrend within the double bottom here that started in the middle part of November. That was a little more volatile, but you can see the second pullback to form the right side of the W. You can see that that is made on very low volatility, which is a good sign. You can see here too in the handle, which started here in mid-December. There's not a whole lot of volatility within that handle versus the volatility that occurred throughout the uptrend. Okay, so the stock movement, the price movement, is getting quieter with these tighter consolidations, and that's a good sign as well. You don't want to see it getting too choppy. When a stock gets really volatile and you see wild swings, that's often a sign that the price is peaking, at least for now, and it's ready to go into a new consolidation or pull back and really start to correct. Okay, so the lower the volatility within the pattern, the better. Okay, you can find these patterns on daily charts and even 10-minute charts often, but normally you find them on a weekly chart. Again, unless the stock is moving very quickly, as was the case here. Okay, so that's the first method that I wanted to show you today. Finding stocks, finding the elite growth stocks, finding companies that are beating estimates with rising future expectations, and you can follow your favorite investment periodical or site, and make a list of these stocks that are beating estimates with rising future expectations as the earnings releases are being made. You hear the news reports all the time. XYZ company beat their estimates, and you dive further into the news story and you find out they beat by 20% or 30% on the bottom line, and they beat their sales expectations by 5%. Now, these are the kind of companies you want to put on your radar. So as these reports come out, put them on your watch list, okay? And then look for these type of patterns, and look for the long-term uptrend. Check the estimates, see if the estimates are rising, if they beat their estimates in the past, what kind of growth they've had, if they're a top growth stock, where they're growing their earnings and sales at more than 20% per year for a number of years. Build that watch list and then find those great technical setups within those long-term uptrends on those stocks. That's a great way to make money in the market, okay? And that's what we teach on TradingPub in our book. And again, we have the blog and newsletter if you want to check that out. Right now we have a special offer. If you go to the homepage on TradingPub, you click on the special offer button, which is right in the middle of the page there. Just click on that button. You'll see a special offer that we currently have. And you have a 10-day money-back guarantee with that newsletter and that offer. So when you subscribe, you see all of our picks and all of our featured trading setups over the past few years. You can go through that. If you don't like what you see, you can just you can cancel within 10 days. You get a full refund. But you can go ahead and take advantage of that offer if you want to have someone walk you through it and have these great trading setups sent to you via email and available on our subscription site. Okay, so right now you can sign up, you can log in, you can see all of our latest, hottest trading setups and these kind of patterns, and be there at the right time to get in before the stock really takes off. So, okay. So now the second approach I want to talk about today is talked about a little bit on investbefree.com, and we have a newsletter on that site dedicated to this approach. And what this is just buy and hold, okay? But buy and hold just the best 3 stocks in the market. If you read books on trading and investing by the top traders out there. One of the questions they answer all the time is, how many positions should I have in my trading account at any given time? Okay, and a lot of them suggest that you should have 3 to 5. Okay, and that's great. It's a great number. I think 3 is great because it focuses you, it forces you to find the 3 best investments out there, best stocks to buy and hold, or best stocks to hold for a week or two, and then trade out and trade into 3 new stocks. 3 is a good number. Now, of course, you want to talk to your financial advisor and find out, how much you should dedicate to trading and investing in individual stocks. You want to figure that out for yourself, either do your own research or talk to an investment advisor first. Once you do that and you decided that I want to buy individual stocks and I want to buy and hold, if that's a method that you prefer, this approach is great for you. I'm going to show you right now, okay? What you want to do is you want to find the 3 best stocks in the market in terms of growth, earnings and sales growth, consistency of that growth, and earnings beats and rising consensus estimates. It's no coincidence that Priceline and Apple had these, and still has these in many cases. Though these stocks have these characteristics of beating estimates with rising future expectations. Priceline is probably one of the best growth stocks in history, and certainly over the past decade or so. And they beat earnings estimates every quarter after quarter after quarter. And they have the consistent growth in earnings and sales over a number of years. We're talking many, many years. Okay, so the longer they have that track record, the better. Okay, that's no coincidence that back in 2008 and 2009, when the market crashed, and if you're looking at good long-term holds, it's no coincidence that Priceline has made a big move since those lows, and Apple has made a big move since those lows, and so has Celgene and other companies. I think Chipotle is another good example. Because those companies had the strong growth in earnings and sales before that. Okay, they already had the track record of growing earnings and sales quickly for a number of years. Okay, so it's no coincidence that those were about 5 baggers and 10 baggers from that point to now. Because companies that tend to beat estimates in the past, and companies that tend to grow their sales and earnings but more than 20% per year for a number of years, tend to do it in the future, as long as there's a decent chance of that occurring in the future. Now, in some cases, like with Apple, there's only so much you can grow. Okay, you get to a certain point where you have so much sales, so much wealth, so much money that you're making, and the sales numbers are so high, you just can't build on that mountain at the same rate as you did in the past. Okay, but with a lot of companies you can, like with Priceline, you still can, and they still are. Okay, so find those companies that are growing their sales and earnings very quickly for a long period of time. Okay, and just buy those stocks and hold them until that changes, until the potential for future growth goes away. Now, a lot of times they'll be beating estimates, and a lot of times analysts will say, well, they were great in the past, but I don't know about the future. But they've been saying that for years for some of these companies, and they still pull it off because they're winners, because they can do it and they have done it. So you want to focus on those companies, buy the best 3, and hold them. Okay. And we've been doing this in a long-term hold newsletter at investbp.com. Now, that newsletter was just a bonus for those who sign up for an elite subscription for another newsletter I'm going to share with you in a moment here. But it was just an add-on, okay? But the first full year and this year have been outstanding. just by using this approach. So if you like to buy and hold, it's a great method of doing that. In 2013, using this approach, the return was 57.38%. Before commissions, for any slippage, which is minimal with this type of approach because it's buy and hold. You only have one trade, okay? And it was 16.59% this year through the end of September. Now compare this to the S&P, which was 32% in 2013 and 8.3% so far this year. So you're doubling the return of the S&P 500 just by doing that. So if you want to buy and hold, if you want to have a low-stress lifestyle and not worry about trading, not trade, it's a great approach, okay? And again, this is a free add-on that we give to our elite subscribers for joining this other newsletter. Another approach I'm going to share with you in a second. That's more effective, but more time-consuming. But we're actually breaking this newsletter off as a separate newsletter that will sell separately now. Okay, and that launch of that newsletter will be later on in November. And if you sign up for this webinar, which you can hear me, you have, you'll receive that notice that of that new newsletter. Okay, so check for that in the inbox in the future if that's how you want to go. A lot of people like to trade and they use different methodologies, but they want a place to park their money. So as they build their account to a certain level, now they want to put their money into something that can grow with no time required hardly of them. And this is a great place to park your money, okay? Because again, it's the three very best stocks that still have that potential, that have a great track record of growing quickly over time. Okay. So now this is the third methodology I want to turn to now. This is the main methodology that's been taught on investbefree.com since we launched it back in 2012. And what this is buying the three best stocks each week in terms of growth, consistency, earnings beats, and rising estimates, okay? And now TradingPub.com, we look at the same kind of stocks, but with TradingPub, we use technical analysis to time entries and exits. Now, with InvestBeFree, we use TA just to weed out stocks that are more likely to be losers, okay? So more of a focus on the fundamentals rather than the technicals. We use technical analysis just to weed out the likely losers, okay? And it works very well. You have only three stocks, the three stocks to wealth, and this newsletter is updated each week, okay? So you always have three stocks, and each week that list may change slightly. You may have one new stock in the list. You might have all three stocks changed. So on average, you have 1 to 2 stocks that are being added or removed from your list per week. So you always have 3 stocks. So 1 week you might have 1 new stock. So you'd sell the stock going off the list and buy the one coming on the list. Very, very simple, okay? And you only do that once per week, and then you're done. So we're talking 15 minutes a week. It's very simple. It's very straightforward. Now, there's no risky options, no margin, no shorting or leverage of any kind. Yet the returns have been enormous, okay? And the reason why it's so effective is because technical trading requires diligence on your part, okay? You have to be consistent with it over time. You got to keep doing it over and over and over again, okay, day in and day out, and you've got to execute your trading plan day in and day out, okay? But with InvestBeFree, you have none of that. You have, on average, like I said, on average, one or two trades per week on Friday. Okay, it takes about 15 minutes per week. You take one stock off your portfolio. You put another one on there. You still got 3 stocks. Boom, you're done for a week. Okay. You don't have to follow the market each day. Checking for buy and sell signals each day. You trade just once per week. Many weeks the list of top 3 stocks don't change at all. Okay, so on those weeks you do nothing. The newsletter comes out Thursday evening, and you put your trade in, you put your order in Thursday evening or Friday morning, or orders, plural. So it's much easier to be consistent and to follow through on it, on the methodology, which is the key to success over time. You got to be consistent. No matter what you do, you got to be consistent and keep doing it. This makes it easy because you're doing it once a week, the same day every week, for 15, 20 minutes. It's so simple. Okay. So for those who don't like technical analysis, or if they find it too complicated, or just don't have the time, this is another great way to trade and still make money, a lot of money in stocks. Okay, so here's the results from our back testing. Before we launched the newsletter and the site, we back tested it through 2007, the awful 2007 and 2008, and beyond through the early part of 2012. And we can see that there was a 300% return, a four-bagger from January 2007 to March 16, 2012. And over that same time frame, the S&P lost money. Okay, now that's before commissions and slippage. But with this technique on our site, we show you how to basically knock out slippage and not make it a factor anymore using buy limit orders, and that have actually improved the results. Okay, so we can see that the back testing results are very good. We then tested it in a live account for a 3.5-month period, starting to use the technical analysis now to weed out the likely losers. And we can see that the account grew very, very quickly at a very high rate, very high annual rate over a few-month period. Now, we then launched the newsletter, Three Stocks to Wealth, on investbefree.com in April of 2012, and we can see that the first year and a half, we can see that it was almost a almost a two-bagger within the first year and a half. Okay, so we can see now we're beating the back-tested returns by applying technical analysis on our part. We do that for you to weed out the likely losers, and we can see that the returns have been outstanding before slippage and commissions. And on our site, we go over the top brokers too, the best brokers to use, and how to save a lot of money on commissions, and also again how to avoid slippage on the way in and to actually improve on the results versus the back testing. Okay, and we had 8 weeks in a row at one point of 2% to 5% gains. Compound gains were over 70% for the first year, while the S&P 500 was up 14.5%. Okay, just a lot of great returns for something that takes each week. Okay, I don't know if I have time to go through all this, but again, we're not using risky options, margin, or shorting the leverage of any kind. Okay, and it's just 15 minutes of your time each week. You receive the newsletter on Thursday evening. You put in your orders to buy and sell stocks in your account dedicated to this approach either Thursday evening or Friday morning. On average, you change 1.5 of the 3 stocks each Friday. Okay, and that's setting you down for the week. Okay, no follow-up analysis, technical analysis, or any further actions from you is necessary. Okay, this really was developed for those folks who just don't have time for technical analysis or don't understand it fully or don't like it. Okay, so if you're in that camp, which I'm not personally, I enjoy it, and a lot of my subscribers enjoy it too. So, I use both methodologies in my own trading. I've had different accounts dedicated to each approach, but this is a great way to make money, make a lot of money without spending much time each week. Okay. So, okay, great. That's pretty much wraps it up. Those are the 3 methods. I'll try to answer a couple questions here because I want to get to the special offer. I've got a free trial offer that I want to share with you with investbefree.com. So I'm going to look through the questions here and see if there's any I can answer quickly. If you do have other questions, you can go check out Trade-A-thon, the site and the blog, and that'll answer a lot of your questions. You can also email me at info@Trade-A-thon, and I'll answer your questions for you. And I want to mention too, we also have a book on our Trade-A-thon methodology that covers our market analysis techniques and swing trading methodology in detail. I mean, if you want to know when the market's about ready to turn over, or there's a good chance the market is about to peak and this bull market's about to end, you know, the book covers our market analysis techniques to help you determine that, and that's a great thing to know. Very, very valuable to know as a trader or investor, and you should definitely check that out on while you're over there at TradingPub.com. But I wanted just to check out the questions here and see if there's anything I can answer quickly. I know we're running out of time. Okay, so how much will the newsletter cost? I'm going to get to that in 1 second here. There'll be a 3-week trial, though, which will be no cost to you. David asked, do you have a performance track record we can look at, please? Yes, the investbefree.com site has the latest performance charts. You can check that out. I also shared some of those with you in the presentation. Are you speaking from personal experience or just being sarcastic? I guess, do you have performance? Okay, it's not really a question. It's kind of people commenting. Is there a link for the schedule? Okay, great. So that's pretty much most of the questions I can answer right now. I'm going to go ahead and go to special offer here. Again, if you have any questions on anything, you can email me. I can call you and talk to you briefly too if you want me to call you. I have no problem doing that. I can't spend too much time on the phone, but I have a busy schedule. But if you want to talk to me for a few minutes about anything, I'd be happy to. If you want one-on-one consulting, one-on-one coaching, I do offer that as well, and I'd be happy to talk to you about my rates and my schedule for that if you'd like to do that as well. So, okay, so we're down to 8 minutes now, and we'll go ahead and get to the special offer on this investbefree.com free trial. And you know, one thing you have to ask yourself, you know, what would you pay for methodology or newsletter with these kind of proven returns and backtest results? That is this simple and easy. It's been red hot for many years. You know, again, we made some slight tweaks to it back in late 2013, and we did some backtesting on that, and we found that the backtesting results before commissions and slippage was something like 1,900%, almost 2,000% over a slightly more than 5-year period. Okay, so it has tremendous returns. The newsletter is doing terrific. You know, it's probably worth several $1,000s per year, at least, given the rate of return that we've been seeing in the back testing and with newsletter. And it's really life-changing, especially for those who just don't have time for technical analysis and time each day to follow a good trading plan. Okay, it's truly life-changing. But if you're skeptical, we're offering a 21-day free trial. So for the first 50 listeners today who sign up, you get 21 days free, and you get the list to the top, not stop, but the top stocks and the 3 stocks to wealth newsletter. If you cancel during the 21-day free trial period, you won't be charged. But once you see the results and look throughout all the newsletters back to the inception of a newsletter back in 2012, you know, once you check it out closely, you'll realize it's a very, very powerful and life-changing methodology that requires very little time each week. Okay, and so after your 21-day free trial, you'll be charged the quarterly rate. Okay, and we're going to take $30 off that regular quarterly rate as well. Okay, so it's $247 per quarter, and that's $30 below the normal rate of $277 for those who are watching today. Okay, and now we also have an elite subscription. This includes some one-on-one coaching, some phone or email support. You also get our long-term holds, our 3 long-term holds, which have been doing tremendously well. over the past couple years, and you also get advanced training videos created and delivered by an expert trader. You get all that, and that right now is $14.97 per year. Okay, so this premium subscription is a lot lower than that. All right, the rate is less than $83 per month, and it's a bargain for this kind of proven performance. Okay, the premium subscription is just the 3 Stocks to Wealth newsletter without the one-on-one monthly support. It includes our premium training videos, where I teach you strategies designed to make more off the stocks in the newsletter. It's a great option to grow your account quickly while spending less than, again, on average 15 minutes per week. We're offering a 21-day free trial, so all you have to do is click one of these links. So just go ahead and click the link where it says click here, or that URL. Click on that, scroll to the bottom. You fill out the basic information at the bottom of the page. Then you click register. Okay, then choose your payment option and fill out that payment information, whether you want to pay by PayPal or whether you pay by credit card. That's fine either way. Okay. And again, you won't be charged today. All right, but you have the opportunity to see firsthand how well this newsletter works. See the training videos that we offer, which are excellent. You see that for free for 3 weeks. And you know, if you don't like what you see, you can cancel. But again, these results cannot be beat with what little time you have each week. I mean, does anyone really have the time with a full-time job or with other things they'd rather do with their time to spend an hour, 2 hours, 3 hours each day, you know, watching your stocks or more, watching your stocks, the normal, you know, fluctuation throughout the day, the normal volatility, which is oftentimes random. So you want to watch random noise all day in many cases, or do you want to use a methodology like our swing trading methodology on TradingPub.com, where you don't have to do anything during the day. Okay, all the orders are placed after market closes. Okay, you only have to spend an hour, half an hour each day when it's convenient for you. After 5, after 12 at night, in the morning, if you want to do that. So whenever it's most convenient for you, you can use these methodologies. And with this investment free methodology, it's just 15 minutes, 1 day per week. Okay, and the results are outstanding for what little time they have to invest. So it just makes sense to try it out for 3 weeks. There's no obligation. Go ahead and click one of these links. Fill out the information at the bottom, and pick your password, your username. Click register. Choose your payment option. We won't charge you again. We won't charge you today again. Okay. You have 3 weeks to try it out, and after the free trial, if you don't cancel beforehand, it'll just convert to the lowest price that we offer per quarter. Okay, so go ahead and take advantage of that. That's for today only. Go ahead and do that and sign up for that. There's no obligation again. And again, if you have any questions after you do the free trial, just email me at info@investbefree.com for that methodology. Just email us on that site, and we'll answer the questions for you as you go through your free trial. So, okay. That's about all I have time for. I think I'm got 2 minutes left, so I'm going to go ahead and just end it there and pass it back to the moderator. But I want to thank everybody for joining me today. Again, if you want to check us out, if you don't believe everything I've said today to be true, check out the Better Business Bureau online. We've had thousands and thousands of people that have signed up for our newsletters, and tens of thousands that have got our book. And you can see on the Better Business Bureau, at the Better Business Bureau, you can see our rating and check out all the information there as well. If you want to, and again, you can try out, you can do this free trial. You can email me. I'd be happy to have a short conversation with anybody for free who's thinking about joining the site and taking advantage of these techniques through the newsletters. You can go ahead and do that. But again, I just want to thank everybody for joining me today, and I appreciate the opportunity at the Trading Pub here to share this with everyone. And I'm going to go ahead and pass it back now to the moderator. And the next speaker, I believe, will be up here very shortly. So I'm going to go ahead and turn my mic off now and just say thank you. Go ahead and click the links there and take advantage of that.